So, as an introduction, my name is Kaveh. I live in the US. I'm actually Swedish. In the US, I say that I'm Swedish, and then people look at me and they think to themselves, they're like, "You're not Swedish. You don't look so Swedish." So I was born in Iran, and I lived most of my life in Sweden. And 10 years ago, I moved to the US. And I worked for another company before Planhat called Meltwater, and we have some people here from that company. I met Mikko there many years ago, and I've been working in the US for a long time and seen a bunch of companies and helped now 2 companies to expand to the US. I'm going to speak about some tips and tricks for Scandinavian startups wanting to break into the US. So that's what I'm going to speak about. I do have a few slides about Planhat because I thought that, hopefully people are interested about some of the things we do too. So I'll speak a bit about that so that you guys have some context. I'm not going to speak too much about these slides, but Planhat, we built a customer platform. So we have a bunch of customers that are using us to manage their existing business. And simply put, we help companies to improve their NRR. And we sort of do well in the mid-market to small enterprise segment. You see some of the logos there, some of the customers that we have. One of the customers that have been with us the longest is actually Vainu. Mikko and Peter have been using, and I think some people here have been using Planhat for a really long time. We're obviously very happy about that. But we sell B2B. We sort of don't sell to consumer businesses. And I'm gonna skip this and go here. What we say is that we're building a customer platform that are helping our customers to be more customer centric. See that most of our company customers are sort of coming from this world where the current tech stack is centered around departments, and we think that if you want to be truly customer centric and improve your NRR for the long term, you need to be customer centric. And customer centricity is not only about a fancy word you need to use. You sort of need to think about how you enable the entire enterprise to put your customers at the center of what you do. So that's what we do. That's sort of the vision behind our platform, that everybody in your company is supposed to use it. So we think a bit about Planhat more in terms of that. We're more inspired by products like the Office Suite or Monday.com or Notion or Asana, more than sort of typical B2B enterprise products like Zendesk or Salesforce, HubSpot, and these things. This is a survey that we did a few months ago. 2/3 of our users are in customer success, and 1/3 of our users are outside of customer success. Okay, so that's that. This is some of the things that we promise our customers that we do. We basically help them to grow their revenue from existing businesses. That's a bit about Planhat. Okay, so breaking into the US. So I was thinking about this on the plane over, and I think that the first thing here, like this needs to be put in context. First of all, I think that there's many different ways, obviously, to be successful. But I had some 5 things that came to mind that, from my perspective, I think was important for Scandinavian or Nordic-based startups, software companies that want to break into the US. Okay, so first of all is that I think that you should go to the US. Don't mess around. Don't mess around back here in Scandinavia. Like, go big. Like, go after it. Like, just go. It's the biggest market in the world typically for a lot of businesses, and it's actually not as hard as I think that a lot of companies think. It's thrilling. It's crazy. Americans are crazy. Like everything in the US are crazy. And I think that you should go. And I wrote here that there's infrastructure for everything, so you don't need to worry about, hey, if I need to set up an entity or I need to how do I do accounting or payroll? I don't think about that. You can buy all those services. Everything costs $9.99 per month. And just go. Be ambitious, just do it. I'm from Sweden or Finland. A lot of Finnish people are like, these are very small markets. And just don't mess around here. Like, go to the US. That's number 1. So the Nordic means quality to all of Americans. So don't hide the fact that you're a European or from Scandinavia or the Nordics. So I think that if you're in the US and your first thing you say that, hey, I'm come from we built that. So we say this in our pitch in Planhat. We say that, hey, we're a Scandinavian company. We started out in Sweden, and like that's immediately a quality stamp of approval. And I think that people should be very proud of it and not hide away from the fact that they come from the Nordics. Okay, number two, start with sales. Don't waste your time to do too much desktop research, market research. Like start with selling, and buy some Google AdWords, some LinkedIn ads, and start selling. You can do that from home. You don't need to go there. You don't need to do, you don't need to do a big McKinsey report or some research. Just if you have a product, try to sell it to some US-based companies. And think about it this way, that if you cannot do it, then you need to fix your products or your pitch or do things, So I think that you should do that. I say that if you need to get on a plane, then get on a plane. Stay up late evenings, do the work. I was speaking to Mikko just earlier today, said that, every night is up late and pitching and whatnot. Johannes from our team has a call today at 9-10 p.m. So like that's just get it done, get some sales. So there's some of the things not to do. Don't start with setting up an entity. Don't start with researching visa and these things. Don't hire an expensive VP. Start selling yourself. Start selling. Number two, just go. You win based on culture. I wrote here. So if you're at some point, you're ready to go, you start selling something else and you want to set up a business there, make sure that the people that you're sending from back home are some of the culturally strongest people that you have. So I think that's very important. I personally think that San Francisco and New York is overrated. US is a huge market. So if I would give an advice, like don't go to San Francisco. And don't go to New York. I think a lot of Nordic companies, Scandinavian companies, think that it's maybe cool to be in Silicon Valley or in New York. Aren't you guys in New York?
Yep.
Yeah.
I'll talk about it in a moment.
Yeah. Don't go. Don't go to New York. Don't go to New York. Check out Boston or DC. I think we have teams and people there. Denver, Austin, LA, Toronto. These are cities where people typically stay longer. They're not as expensive. And you have good people in all these cities. All the good people in tech, if it's sales or developers or product or marketing people, not all of them live in San Francisco or New York.
Why not Chicago?
Chicago is great too. Yeah, I think that Chicago is fantastic. Chicago is great.
What San Diego?
No, yeah, no, you can do that in LA. I wouldn't like.
San Francisco has cold water.
Yeah, so I actually don't think you should go to San Diego. I have been there, set up teams. Don't go to San Diego. And my advice, I would not go to San Diego. I actually do surf. Yeah, I surf like 4 or 5 times per week. So I surf a lot, yeah. And you can surf in LA. Yeah. Getting a visa takes time. So if you're thinking about moving, it does take time. So plan ahead. And as I said earlier, like all the other things, administrative things you need, just don't hire people to do it. Just buy the services until you have some certain scale, and then start hiring some people yourself. Okay, hiring. So I was thinking about hiring, and like when it comes to hiring, I think that this is where you can very easily go wrong if all you've done is to hire and build a business here in the Nordics. So I said that no, it's not like hiring people in the Nordics. It's just the quality of people are sort of all over the place. Just because somebody went to college in the US or went to it doesn't mean that necessarily that they know that may be fit. So I think that if you have never hired people in the US, then try to find a mentor or maybe an investor friend, somebody that can, or an operator that has done it before, so they can help you with this. Because obviously hiring the wrong people will be very expensive and be a pain. And then number 3 there too, like no, it's not cheap. I've had some experience with this, some other companies that they come from the Nordics and then they start hiring some strong people in the US, and then they get scared when they just get frustrated when they hear the salary expectations that people have. So it's not cheap, and you typically get what you pay for. So just be prepared for that. So what to look for when you're looking for these people? So obviously you need to define like what it is that you need. I think that it's very important to have self-starters and that you hire builders, because people that will be working for you in the US, they will be sort of, if their headquarters or the home market is somewhere here in the Nordics, then they need to be able to be builders and actually be able to build companies because of the time zone differences, all the challenges that come with that. If you're hiring salespeople, make sure that you hire salespeople that can build the pipe. And I think all of the salespeople you interview will say that they can build pipe, but like don't get tricked there. You could you make sure you hire people that can actually build pipe if you're hiring for sales. And don't compare salaries to your home market. Just don't try to do that. If they ask for salaries that are more than what your CEO makes, just be fine with that. It is just more expensive. And typically, you get if people are more expensive, they're also much better. That's typically sort of as a rule of thumb, except for people in San Francisco. Yeah, and then start with boot camping people to your home offices. So fly people here and make sure they spend some time, a few weeks in your local office. Okay, salaries, quotas, and pricing. Typically, things are more expensive in the US to charge more. What's your unit economics? So I've seen a bunch of companies where like you sell 5K deals here in Scandinavia, and say in Sweden we have kronor, as you guys know. So people charge like 50,000 kronor or 5,000 euros for a service, and they feel like, yeah, that's a good average deal size for them. And just don't, if that's your pricing for your product, like don't charge $5,000 for your product in the US. You should charge $10,000 or $15,000 or even $20,000 for the same thing. Things are just more expensive, so you should charge more. And the same thing goes for the people that the quotas that you put on people. So this comes with the same, like don't compare. I put some quotas there and salaries for people, especially in sales. So, having a 600K quota is a minimum for a B2B SaaS person, I think. Yeah, that's that. And then the last thing on culture. In the US, everybody said that they're excited about everything. And I think especially I think if you're a Finn from Finland, you'll find it weird. Like everybody's always excited. And then like in Scandinavia, we don't have that. So it's really weird. But everybody like excited about everything. Yeah, so be aware of the cultural differences. So I've learned this, that like US is very like almost like different countries. So if you hire people from the East Coast or West Coast or the South, they're just very culturally different. And not different like how Finnish people are different from Swedish people. Like they're just very different, pace and just everything about them are very different. So you need to sort of be aware of these things. Think those things through. Be direct and get to the point. If any of you try to sell in the US, you need to be very like to the point, and just don't be fluffy and inspirational. Just say what you want. This goes for if you're trying to sell, if you try to hire somebody or negotiate with somebody, or if you try to let go of somebody. Just be very clear with what it is that you're trying to do.
But hey, also from my behalf, welcome. Mikko is my name. I've been actually part of 2 US market entries. One of them was actually when I was at Meltwater and Kaveh was there. it wasn't a market entry. They already had done it, but I saw how successful business looks like. Then with Vainu, we actually did the first US market entry in 2017. Our CFO, unfortunately, who's sick today, he described it to me. I was responsible for the market entry, and he described it as an expensive hobby. So back then, we didn't have tons of customers. We did have people and salespeople. Now we're redoing it with the global product we just launched. This time it's a little bit different since we don't have anyone in the US, but we do have customers, and CFO likes that approach quite a bit. But that's my take on that. And I used to live in San Francisco and then also in New York. How about you, Maxine? Maybe we can also introduce you quickly. Yeah. You have, of course, lots of portfolio companies, and I would imagine many of them are in the US already.
Yeah, exactly. So I work for Northzone, one of the largest early stage funds in Europe, and we actually went to the US 10 years ago. We also went to New York, unfortunately. But we saw, I mean, from the investor side, it's interesting because everyone wants to go to the West Coast. And in the West Coast, it's like super easy or super difficult to invest. If you're in the club, you can invest in everything. If you're not in the club, you can't touch anything. So we went to the East Coast instead, to New York, which is actually quite underrated as a system, especially when it comes to, I'd say, healthcare and to fintech. But anyway, so yes, we invest like 30% of our fund in the US, and we started the office because we were helping one of our portfolio companies move there actually back in the day. So one of my partners, PJ, he saw that the company, which was Spotify, they were going to open an office, and he just wanted to go with Daniel and Martin. So basically because he wanted to live there himself. And then it's taken off, and it's we're kind of constantly trying to bridge our portfolio from Europe to the US. And it's, I mean, I think I can relate to a lot of the issues that you were mentioning before that we're helping. But yeah.
Good. And maybe we can also ask from all of you, how many of you have today business in the US? Maybe you can raise your hand. So roughly 50% of you. And how many of you are planning to do it within the next 2 years in case you don't have it? So quite a few as well. Kaveh, you mentioned from sales point of view that you need to be direct. One thing that I've learned is that when you do sales in the Nordics, especially in Finland, and if the buyer says that this is interesting, we will reconnect next week on Wednesday. I mean, then you can almost take it as a face value that it happens. In the US, someone says that, Mikko, this looks interesting.
Yeah, they're excited.
They're excited. Like, how do you actually hold people accountable, the buyer, so that you actually get that follow-up meeting? And how do you read between the lines if they're truly interested in what you show?
Yeah, so it's very hard. So yeah, exactly. People will say, "Yeah, I'm very excited. Like I'm very interested," and you never hear from them again. How do you nail the person up? Like I think those things are like typical sales skills that I'm sure that it's same in any country. Like set up the meeting, make sure that you know when it is and whatnot. So I don't have any specific things except for like typical sales things, but I do. Just asking directly and being like, hey man, like I don't want to waste your time. Just don't waste my time either. Should I speak to somebody else in your company? I think like that kind of approach.
Yeah. Any tips from you, Maxine?
No, I mean it's like dating, right? So how do you get someone to not ghost you? But I had a question on hiring actually, because you said move your best people, but you also said to hire. Would you how do you balance moving Europeans versus hiring locally in the beginning? And how would you value setting up a team in one place versus kind of distributing them?
Yeah, I think that obviously there's different ways of doing it, but I do think that like you should have send at least one person from your sort of home market, 1 or 2 people, and then you hire 1 or 2 people. So there's a good group starting out. And then if they could be in the same office or location, I think that would be the best thing to do. But then I think that for Vainu's example, if Mikko is moving himself and kicking it off, I think that kind of approach that don't half-ass it. Like it's the biggest market in the world. Like if you crack it there, then what you do back home won't matter. So take it seriously. Send your best people. 1, 2 people, and then you hire a bunch of 1, 2 others, and then try to build a team from there.
And I think it's to some extent a little bit different, not always easier, but 10 years ago, you often didn't have a freemium business model. So holding people accountable, you often booked a meeting, maybe you did a demo, but they didn't have a free trial. So the only connection you had with them was the sales process. But now when there's lots of companies doing the PLG motion and you have freemium products, you actually get the engagement data. Like, are they actually using the app? Are they trying it out? And I think that's also one way to filter out the ones that are just saying that this is exciting, but nothing happens. Another funny story, when I was having my first week in the US, I met, of course, with lots of colleagues at the office. And, you know, in the US, they always say that, "Hi, Mikko, how's it going?" And I always started replying. And people don't really expect an answer for that. And I was like, okay, they ask, but then they don't listen. And I started explaining how the day has been and all that. So, but that didn't take too long. But anyway, so
it's very culturally, I'd say, like Americans with Finnish people. Like total opposite. Yeah. It's
I have a question about valuation. We have many founders and executives. Do you think, Maxine, that it has an impact on SaaS business valuation if the company is in the US, like same size in terms of annual recurring revenue? One of them is only, let's say, Europe, and the other one has mix Europe and the US. Like, how big is the impact on valuation?
I'd say 100% it has an impact. It's always difficult to kind of quantify how much, but we literally have like a scoring card that I can't share with you exactly, but it's like we look at how much of the business comes from the US. And we have like the kind of the red, the orange, the green one. And if it's more than 50%, it's a green. And if it's like nothing, it's red. So it's definitely something we look at. Because it's like, obviously, if you can't sell in the US, you can't win. And I think that's that's why, like, yeah, I'm surprised that I think the kind of, especially the Scandinavian culture and kind of also I'd say like Benelux, not the Germans and the French to stay in France, but like the Nordics, like they think too small all the time. Like, you have to think bigger. But that's also like, you know, I'll be talking about should you raise VC capital or not. And I think that kind of goes into the whole equation.
Kaveh, I mean, you're also in the boards of quite a few companies and I guess advising many companies. I think you also give tons of advice for us, for me and Pietari all the time as well. But if you have a successful Swedish or Finnish SaaS business and then they have the ambition that we want to go to the US, like what are the typical pitfalls or mistakes you see that companies are doing? Of course, you touched some of them already, but what are the most common pitfalls that founders do?
I think the biggest one is, I think there's two. One is that they don't go, you know, which is, you know, I'm on a board of a company that I'm very passionate about, but like just very Scandinavian. And as like Maxine said, like it's important. Like, why are you messing around here at home? I feel like it's, especially if you build a B2B and a SaaS product, like you build the product, just like start selling it in a different market or in the US, I think. But I think that the second one is that you compare cost and things to your home market. And then I think that's just the wrong way of doing it. Yeah. You know, you try to hire somebody and then, as I said, like you hear about the salary expectations and you're like, oh man, like that doesn't make sense. But you have to just think about it, like the quota should also be 2, 3, 4 times higher. And your prices should go up and whatnot.
Yes.
Can I ask?
Yep.
Or sorry, go ahead.
No, I'm just thinking about time-wise that very soon we'll move to the next topic, which is revenue ops. But if you have a question, feel free.
Yeah, I was just wondering, because obviously you guys have this like remote setup. How how disciplined you have to be on what functionalities you have in each market if you're not remote? Like, what do you need to have beyond sales and customer success when you think about product, when you think about marketing, when you think about kind of across the functions?
Yeah. So I think it's different for different businesses, obviously. But typically B2B companies, like I simplify and say like B2B, especially SaaS companies, like either build a product or you sell the product. And everything else is admin and support. You know, and that doesn't mean that, for example, marketing or finance or support and other functions are not important for the business. Is that they are supporting the core business. So either you need to build products or you need to sell them. Sell them includes the renewing them and reducing churn and upselling and growing the accounts. The other functions also need to be coming depending. Also, we have a technical implementation team. They need to be local to the different markets that we have. Support needs to be local, and local meaning that they speak the language, they're in the time zone and whatnot. But we, for example, don't need product people necessarily to adjust the product, because it's the same product that you buy in Scandinavia and the US or in APAC, at least for us. Whereas I can see definitely some companies be like, they maybe need to add certain things. Maybe there's some content in the product, like Vainu, that needs to be specific to the market, and then you need that. But I think that like the product pieces of that can still be centralized. So I think that as an example, Vainu, they don't need to have, the way I understand the product is, they don't necessarily need to have Americans building out the American database. You could do that from Finland or any other country. But yeah, but another thing just on this, I usually say that like what the customer cares about, he doesn't care about where your product is built, but he cares about that you're local. You know, he wants to buy from somebody and be serviced by somebody that is local. So from the customer perspective, so if I am Swedish or, you know, if I'm French, if I have a rep that is selling this thing to me in French and I'm supported and onboarded and serviced by French people in France, like I care about that. But if you build a product in Finland or in the US or in Sweden, like I care less about that, I think.
And I think if you are truly global, it's actually easier to be pointed. For example, if we decided to build a CRM now in Finland, and if we only did it in Finland, you'd have to sell to lots of different industries and lots of different type of buyers. And then suddenly you don't have like one buyer persona and ICP. But if you do it globally, I mean, you can just focus on very specific niche and be extremely good at that. So I think the product often travels a lot better when you stay focused. And I think if you have a big total addressable market, then it's easier. But I think time-wise, we need to jump into the next topic.
Okay,
you come here, and I'll take that one.
Hot seat.
And next topic is RevOps, revenue operations. How many of you have RevOps team today in your company? Can you again raise the hand? 1/3, maybe 50%. So when we launched Vainu Global, so Vainu was launched 2014, and we've been having a Nordic databases up until this year, and also Dutch database. And then we decided that we also want to have a global product, so we started building it already a few years ago. I've been a product manager for that. And then when we released it in September, the first customers that we started to see, almost all of them, they had a title called RevOps, head of RevOps or VP of RevOps. And then obviously what we did, we decided to interview lots of them so that we understand the buyer persona and all that. So in the past 60 days, I've been lucky to conduct more than 50 interviews with RevOps people. And I think there's a couple of interesting things happening, and this applies to all SaaS companies. Of course, if you decide to build a function like RevOps, but especially if you build go-to-market technology, I think RevOps will be the new buying center you're selling to. Awesome slide. Got some credit from Kaveh regarding the design, so don't focus on that.
Very bad.
We haven't raised lots of money, so we're bootstrapped, and you can see it in the slide. But I think this is my take on the history of ops. So first, you didn't have anything. You just have some people selling, maybe a few CS people, somebody doing marketing, and maybe a finance guy. But then I think sales ops is the first one you launch. Typically, it's the salesperson who is really good at using CRM. At some point, somebody decides that, hey, Jim is so great updating the CRM. He needs to have that role so that he's keeping everybody accountable. And then you have sales ops. I think at the same time, the one who's good with Excel, let's say he's Ludwig. Ludwig could be the one that he starts doing lots of finance ops, right? And then you suddenly have finance ops or whatever the name is. Then at some point you realize that you actually do already marketing ops. So maybe you have a growth marketeer who is analyzing conversions and maybe using tools like Supermetrics, and they're analyzing how things are going, and they build stuff themselves. And then you have marketing ops. My experience is that CS is the last one. And then you have, for example, someone in CS, typically they look at sales and they're like, hey, why is sales and new business having so many great insights all the time? We need analytics as well. And then it's typically a person with strong results in CS who's very systematic, and then that person gets promoted to be CS ops. And I think many companies are actually today here. And I just interviewed Tony, who's from Denmark, CEO of Crowblocks. I think he had a term for this setup, and it's siloed ops or silo ops. So you have all the ops, but they're not one team. So sales ops is helping new business, and Ludwig is helping finance, and then CS ops is helping CS, and they're all a little bit siloed. But I think there will be a RevOps team where they combine all these ops people under one team. And then they will, of course, focus on new business, CS, marketing, and finance. And it seems that when it comes to responsibilities, they focus on processes and playbooks, obviously. So go-to-market processes and playbooks, and not only go-to-market, but the whole customer journey. Then they play a super important role deciding what technology and tools are in use. They often are also the main users for those technologies, especially when it comes to go-to-market technologies. And that's already a big thing for many of us if we sell that type of tools and technologies. They also work a lot with data. And I think when I've been interviewing VP RevOps people, there are some that have a sales background. So some individuals are the ones that used to be head of sales ops, then they get promoted to be head of RevOps. But there's also lots of people with very different background. Some people, they join from consulting companies. Maybe they've been at McKinsey and Bain and these places. Some of them have a very strong data background. And I'm not saying that there's a better background to have or profile, but I've seen lots of very successful ones with quite different backgrounds. So it's not always that you're first account executive and then sales ops and then RevOps. They also focus on metrics and integrations. Sometimes maybe 10% of these individuals, they report to CFO, which might be a little bit surprising. I think most often they report to Chief Revenue Officer and sometimes directly to CEO. The US companies spoke with QuotaPath. There are only 80 people at the moment, but they have 4 people in RevOps. So that's 6% of the whole company doing RevOps. And I mean, it's a great company, and I think they're building it in the right way. The CEO is, I think, third-timer SaaS CEO, so most likely knows how to do it, and they at least invest in RevOps a lot. But I think what this means that up until this point, certain tools, it could be like Vainu, maybe we have been selling it to sales and new business. Planhat, I think you speak with lots of CS directors, then HubSpot and maybe Supermetrics, you speak with marketing. Sure, this selling Chartsby, you deal with CFOs. That's what happened when you spoke with Kaveh. Kaveh said that, hey, for the person from Chartsby, that you need to speak with our CFO. So this is maybe the reality still, but I think what will happen is that many of these products will actually end up doing business with RevOps, because you can't buy siloed software when you have RevOps. It has to integrate, and this team is responsible for those metrics and the whole sort of revenue engine. So you end up speaking with RevOps. I think for many of us, it's a big change, because especially if they have background in consulting and data and tech, then they're actually very experienced buyers. They're advanced users. I really enjoy selling to this team because they, for example, know how to use an API. They know how to set up an integration themselves. It's completely different compared to, let's say, a junior sales team lead. They're not that tech savvy, but these buyers are. So I think if you have a strong product, good integration capabilities, you enjoy doing business with them. But I think that's the reality for many of us. And this was the intro. So let's discuss RevOps a little bit, how to build RevOps team, and also what it means for us as SaaS vendors, and if it's a new buying center.
Yeah. So I have just a question. So you said that 10% of the RevOps people you talk to or you see reports to the CFO. And then did you say that 90% report to the CRO, or where do they report?
No, I would say 10% CFO, then maybe 70% chief revenue officer, and then the rest directly to CEO. So, but and they're very senior. Like sales ops often is former team lead or AE, but then RevOps, you might have somebody who has been doing consulting for 15 years in one of the best consulting agencies, and then they join B2B SaaS and they're head of RevOps. So I think it's a very senior profile. Maybe that also explains why they report to top executives.
And do you because we see that when we're selling our product, we definitely end up with RevOps people. But can they make decisions, or is it more like they do the analysis of picking different vendors, understanding the tech stack, and making recommendations? Like who's making decisions?
Yeah, so far, at least based on experience with Vainu Global, they're good at making decisions. So they do buy, they make decisions. Do they need to get budget from someone? Yes, I think they are. They speak with CFO, they speak with chief revenue officer. One thing that they have been mentioning a lot is that since they know the metrics in and out, typically they share the same metrics as the company management team. So they don't have like RevOps specific metrics. They have the same metrics the top management team is looking at. And as a vendor, you need to build a case that, hey, this is the metric will improve for you. Let's say selling Planhat, I guess it comes down to net revenue retention at the end of the day. And you need to build that connection that if you invest in Planhat, we will drive net revenue retention up.
Yeah.
And so you need to be very like return on investment or metric focused, in my opinion.
These companies that you've spoken to, kind of at what stage is RevOps really critical? Like when can you not live without it? And when is it kind of start exploring time?
Yeah, I've been actually asking that question, like what's the right time to have the first RevOps person? I think the most common answer is that when you're roughly 50 people, obviously I don't think you can say that it's always 50, but you typically have few people in sales, you have few people in CS. It's the moment, like first you need to have product market fit. Then second step is that when you start seeing that, hey, we're about to have go-to-market fit, which is different from product market fit, that you have a scalable way of getting customers and retaining them. I think that's the moment when you can have a team that is optimizing that flow. So it might be 50 employees for some companies later, for some companies even earlier.
And most people have then taken kind of existing employees and transferred them into a RevOps role versus kind of bringing in someone.
Yeah, definitely more external hires than compared to sales ops, because I think sales ops, the first sales ops is always a successful AE or team lead or somebody who's good at using CRM and likes that stuff a lot, sales ops. But I think RevOps, they actually, these companies at least, they've been looking outside quite a bit.
Okay, cool.
And Maxine, at your portfolio companies, do you guys, do you see a lot of RevOps people?
No, not yet. Yeah. I mean, I think it's definitely not in Europe. I think we're seeing it in the US, but not in Europe as much. We're seeing, like, obviously everyone has a chief revenue officer now, but I think the RevOps team, they're still siloed. And then they might work as RevOps in reality, but it's not defined. So I think it's super interesting to see that it's like, if you can do it much earlier and kind of set the stage, you're going to get so much more out of it.
Yeah.
I think.
What are some of the kind of the mistakes and the pitfalls that you've picked up on from the interviews?
The person needs to be super strong, and the reason is that none of these departments are reporting to them. Like if you're head of RevOps or just one person in RevOps, these individuals you work with, they're not reporting to you. So the question is, how can you make an impact, even though they're not directly reporting to you? And that also means that the person needs to know business in and out, also needs to earn the credibility in the eyes of these individuals. We have lots of sales ops and RevOps people out there that people don't take seriously. It's like, this person is just the one who tells me to update my HubSpot at the end of the day. Like no business value. But I think if you can showcase that, hey, I'm building a revenue engine, and if you follow the playbook, if you follow the methodology, if you implement the tools that we're doing, we will make you more successful. So I think the pitfall is that, are you capable of making an impact without having direct reports?
All right, so we need to switch because of time. Give Mikko a hand. Awesome as always. I think this is super interesting, and there will be some mingling, right? So let's continue the conversation there.
Cool. And so from the people who are building stuff to the people that are piggybacking on the people that are building stuff. My name is Maxine, and I work with a fund called Northzone, a name specifically designed to be unpronounceable in any language. Honestly, by the founders in the beginning. I'm gonna kind of give you a brief intro of who we are. I'll keep it pretty short. Please kind of interrupt with any questions at any time. And then I thought I'd give like just a very brief kind of introductory view on how we see the markets, how we see valuations, how we look at metrics, and kind of how that's changed from the kind of the big two-party years, or 20 and 21, to 22, that definitely comes with its own challenges. But we as a fund kind of have always been in the earliest stages. This is a photo of one of our most successful founders, Daniel Ek. If you've seen the playlist on Spotify, we are the female golfer. Everything else in that series is untrue. But we've kind of always been very focused on trying to build up our platform and kind of not just kind of stay in the giving you money part of things, but rather kind of build the ops team that we have, which is recruiting and marketing and legal and so forth. And really kind of focus on the entrepreneurs versus the sectors. So we invest very kind of sector agnostically in Europe and in the US, kind of coming from the Nordics, then, going to London, going to Berlin, going to Amsterdam, going to New York, and kind of continually investing across these geos. We're probably still known for being the first and biggest ticket in Spotify, but that is kind of ancient history now. So today I'd rather point to Personio being one of our breakout companies. Last year I would have pointed to Hopin, perhaps not as much anymore, and a few other kind of cool brand names. But I think what we're the kind of the common thread with us is that we're really looking for entrepreneurs. We've been around since the mid-90s, which means that we're investing from Fund 10. We're not like, our reputation is everything we have, and the founders we partner with is everything that we've got. So I think we're definitely more in the long-term type of game versus other funds that are also amazing. But if you're raising your first fund or your second fund, you're going to have a very different outlook on kind of the short-term returns that you do. But a few kind of logos on there, and then a few more logos on here. I thought I would stop there in terms of kind of the Northzone intro. I don't think we have any more slides.
Maybe you can help people. What are the check sizes you do? When do you prefer coming in?
Yeah,
how?
sure.
Like,
of course. So we're investing $1 billion fund or €1 billion fund. These days, it actually matters what currency you say when you talk about them. But basically, from the earliest days of seed, which is like 2-3 million rounds, up to pre-IPO rounds. I think we tend to play at Series A, which for us is investing 3 to 12 million in rounds that are 8 to 15 million euros or dollars, if you will. Obviously, a Series A in Helsinki is very different to a Series A in New York. So kind of take it for what it is. And I think also these kind of the round names, what is seed, what is Series A, is also super complicated. So basically, we invest, our smallest ticket is 1 million, and then we go up to, I'd say, 35, 40 almost these days. But definitely...
That's in dollars, sorry, or euros?
Well, euros,
Euros,
I should say,
okay.
or dollars.
Yeah, okay.
But basically, we're super flexible, and I think that's the kind of benefit of having been in the business for so long, that we play for ownership in the beginning, and then at the later stages we play for money at work, because obviously that ownership matters less in growth stages. And we are quite active as investors, I'd say. Kind of back to the platform team that we've been building, we want to be super active in our companies. We want to be there, but we're very aware that some founders just want our money and then want to see us at the board meetings, and that's fine too. So basically, it's kind of a one-stop shop when it comes to. So we are, venture capital is so early that we only invest equity. We don't do debt in addition. And I'd say if 36 months ago, that's 3 years ago, our ticket sizes are the same. 2021 were insane years when it came to kind of public valuations, when it came to the tech frenzy. So I'd say now our ticket sizes have definitely gone down. And if we look to the overall, I'd say, investor sentiment right now, there's definitely, like, if I look to what matters to us right now, especially investing in B2B SaaS or B2B in general, I'd say growth is definitely still the number one metric. Yearly ARR growth, that is what we look at. Then the second one that has been super relevant, but is more than ever, is definitely net revenue retention. That is the one thing we look at. Profitability is a solid third, I'd say. And that can mean different things, and happy to talk more about that, but you can look at profitability on an overall kind of kind of operating margin type of lens, or you can look at unit economics. A lot of people talk about the rule of 40, which is basically kind of the combination of your margin and your growth. The rule of 40 is really not applicable to early stage companies because it doesn't really reflect the underlying processes. So for that kind of the earliest stages, and then when I say early stage, I say sub 25 million in ARR, it's definitely your unit economics that you want to focus on. And then I'd say the other two things that we really look at now that we didn't a year ago or 2 years ago is burn. And you can talk about the burn multiple if you will, but it's like really the same. And ARR per FT, which is also super interesting to look at because a lot of people have been hiring like crazy, and it gives quite an interesting overview of the business.
I have a question.
Yeah.
So
I'll go back to this
thinking
one.
about, because obviously when I did those interviews, many of those individuals were talking about recession playbooks and I think it was for the American companies, it was very obvious that it's like a downswing in economy and very tough environment to raise any money. I think yes, we're discussing it to some extent in Europe, but how much have the volumes gone down in terms of funding rounds? Like I also hear that many companies are now preparing for the world that there won't be too many rounds the next 18 months or 24 months. Like, is that the case, and do you see it as well?
100%. I mean, volume is down massively. And I think there's also a lag in reporting. So even though you're reading about, funding rounds being announced now, they were probably done before summer.
Yep.
Investors do not want to invest right now. And if I were a startup, I would not go out and raise money right now. Obviously, quality still pays. I mean, I'm not saying it's impossible to raise money, but it's not as expensive as it used to be. And people really don't know what to pay. I think that's the biggest issue. And a lot of funds also raised money because, I mean, this is the kind of the downturn is not the unusual thing. The unusual thing is having 13 years of kind of a bullish stock market. So a lot of funds raised money, we raised money from our investors 2 years ago, 1 year ago, and we can sit on that.
But how about then I'm thinking there's no rounds happening at the moment, but then all the VCs and private equity, they have, I would imagine, more money than ever ready to be deployed.
Yeah.
Like, how should SaaS startups play this now? Like, you don't know if it's going to be the winter for 12 months or 18 months, but there's so much money available, but nobody's doing anything because everybody's careful.
Yeah.
How would you do it? Would you try to make sure that your company is cash flow positive and then ready to raise whenever the funding is available, or what? How would you advise?
Yeah, so the thing is, the funds, and this is maybe a harsh reality, but we don't need to deploy. We can probably sit in our hands for a year because our deployment cycles vary and we're flexible. But I think, yes, we made sure this summer that all of our companies had at least 24 months of runway. And then we pushed them on profitability. And some companies understood it directly, and some it took 3-4 calls and just you need to shift. You cannot be hiring 40 people in H2. But yes, steer towards profitability and then kind of go to debt. Make sure you can look at there's tons of banks. I mean, Silicon Valley Bank just established their first office in Stockholm last month. Kind of look at debt. I'm not saying that's amazing, but I'm saying that you do not want to go out and fundraise right now. And a lot of companies, they don't understand profitability. And I think that's a challenge because they've access to capital has been so easy.
Can I ask one thing that me and Mikko, we're not investors, but the one thing that doesn't make sense to me is that investors say that they keep their investments for, I don't know, how long do you guys keep your investments for?
Our fund is 10 years.
Yeah.
And then we can run over
10 years.
Yeah.
But say between 5 and 10 years.
Yeah.
So right now, you get to invest in companies for lower multiples.
Yeah.
You're not, if you invest in a company today, you're not expecting to sell the company next year because you're saying that you'll hold the investment for 5 to 10 years. So in a way, isn't it a really good market for you guys to actually invest now? Right?
Yeah,
and
it is.
So that the fact that the multiples are going down, why are investors so nervous when, I mean, you're thinking about your investments for the long term anyway?
Well, I think
so there is a downturn, yes.
Yeah.
I understand that, but I mean, if you really care about your return and the multiples and where this company is in 5 to 10 years, why are investors so nervous now?
Yeah, I think there's two answers to that question. And I think it's not always about kind of investor nervosity. The best companies aren't racing right now. So the best companies know that they can raise at higher valuations in a year, in 18 months' time, just as Mikko said. They're kind of waiting for that. So it's not just that we're not, all the best ones are out there wanting money from us and we're not investing. It's also that we're not getting access to the best ones because they're like, screw you, we're not going to sell at these prices.
The market, there's no activity in the market.
Exactly.
Yeah.
And then the second thing is that, yes, you are right that we could invest now, but we also don't know what's happening. I think it's going to need very different volumes in Q1 versus Q4 because we're still in it right now. And I think in Q1 things might have stabilized a bit more, and then we might start doing deals. But I think it's also at the end of the day, do companies turn profitable and then kind of do the whole kind of journey from there, or do they turn temporarily profitable and then have to raise more money? So it's not for us, I'd say, at Series A, it's not about like, will this company be a great company in 5 to 7 years, but will they also be able to raise the money that they need to get there? Or is this the last money in? And those are two very different profiles. And I think a lot of founders are kind of on the fence when it comes to like, do we just not do this anymore? Do we just kind of go from here we are and the money we have? Or do we kind of go in for the full fundraising journey? So it's like, I mean, one of the early stage KPIs as an investor is, do we see this company raising a Series B or Series C successfully? So that also goes into it. But I mean, there are rounds happening, obviously, yes. I tried to do a deal 2 weeks ago and lost to another fund that paid up. So obviously good rounds are happening, but I'd say it's kind of more on the, if it's like pre-revenue and you put 5 million in, they could last 7 years on that if they wanted to.
Yeah, understand.
Yeah. One question: how many of you have ever built an investor deck and sent it to someone? Maybe you can raise a hand if you have been part of building an investor deck. Now we have a person who has received tons of them. Like, what are your tips for SaaS founders? Like, people always discuss and they look at the best SaaS pitch deck ever, and they take that template, and sometimes they start with the team, sometimes the metrics, sometimes the pain point they're solving. What is a good pitch deck? And also, what's the best way to reach out to you if you do outbound? You want to get in touch with you, like a LinkedIn, email, phone call, intro? Any tips for SaaS companies?
It's a very good question. I think I'll start with the second one, kind of the outbound. Email me, email any investor. I think there's no such thing as a warm intro anymore. Obviously, it helps, but it's definitely not a prerequisite. I personally hate LinkedIn, so I literally have my email on my LinkedIn saying email me instead. So that part is like super easy these days. Investors are approachable, and the ones that aren't, they're assholes. So like, don't do business with them anyway, if they're kind of still in their ivory towers. The second one, the pitch deck, is like, never spend too much time convincing someone there's a problem and that you're solving it, because if people don't understand the problem, they're never going to invest anyway. You want people to kind of grasp the problem, so kind of make that part really easy and don't spend like way too much time talking about it. Then kind of show kind of quick proof points of the TAM, because I think in general in an early stage, I mean, there's 3 things: there's timing, team, and TAM. That makes sense. And then, I mean, also kind of don't be afraid to share like a 10-page slide deck. I think a lot of founders are sometimes a bit too scared and that will share it, but like, have faith in the person that you're communicating with, and like, don't go like, no, I'll explain in a call, because then that person, like, it's way better to understand before, is this a fit? Should we waste 30 minutes of each other's time or not? So like, don't be afraid to share stuff. But otherwise, I mean, it's super standard, and it's like, make pretty slides, because make it foolproof, make it idiot proof, because that's kind of the receiving end sometimes. Not too sophisticated.
You had a question, Kaveh. You were about to ask.
Yeah, I thought this was very interesting. But how much among investors? How much is it this herd mentality?
A lot.
Yeah, I feel that. So I have been, as you know, we have our CFO that is very good at these things and understands the market really well. And for me, I've been talking to a bunch of investors, but I do feel like. Yeah, I just wonder like how I feel like people get excited when other people are excited.
Yeah.
And so how much of that is there? Because to me, this thing where that market is down, you're an early stage, or you're an investor in a private company, that you care about what the multiples are this quarter or the last 6 months. To me, and again, like I just don't understand. That's why I'm asking. Like, to me, if you find a good company, say that Vainu is a great company if you do invest in. Like, if it was me, and I would love to invest in Vainu. Like, I don't care what happens to the public markets or what the multiples are today. Like, if I'm an investor and I want to deploy money into Vainu, like, I don't care. Like, if as long as I'm thinking about this investment as like if that's the case, 5 to 10 year horizon, like, I think about this opportunity. I'm like, in 5 to 10 years, like, I would be like, yeah, this is a good company. Then to me, and again, I'm not an investor, but like I'd be like, I don't care what public market investors are thinking about SaaS multiples, because I think that these people in 5 years will be so. But like, so so you answered that earlier, but like, how's the herd mentality? Like, how does that work?
So the herd mentality is definitely a thing, and it's been overly present, I'd say, over the past 2 years. And it's like, I mean, it's like kind of kids in a candy store, right? If one kid wants something, all the other kids are going to want it, and that's exactly what the VC landscape has been like, I'd say, especially in 20 and 21. The FOMO game, which is awful, and that's, I think, where you really see which funds have been in the market for a long time and that stay disciplined, or the kind of the new fund managers who are willing to pay up because they just want to get into these companies. Because basically, you know, if you said yes in the past 18, 24 months, then you were doing the right thing. The only way you would do the wrong thing would be by saying no, because everything just kept going up. But the thing is that we also have our investors. We have our AGM once a year where all of our institutional pension funds go like, but why did you pay for this? Because you're not going to be able to IPO it, you know, at this price. So what are you banking on? What will happen? So I think there's that part of things that kind of require us to stay disciplined. But it's also, I think it's kind of back to what I said. You know, fundamentally, if you can strike a deal with an entrepreneur, that's amazing. You should always do that, regardless of the multiples around it. But like, how do you still, as an investor, you kind of have to, you know, be held accountable to what is a reasonable price to pay. And why would Mikko, you know, agree to letting you invest kind of way below what he thinks, or vice versa? So it's all about that kind of the marriage part.
Yeah. I'm thinking about Hopin, you know, about FOMO and just people going crazy. And I don't know, were you involved in Hopin?
Yeah.
Yeah. So,
but we did Hopin at seed.
Yeah.
So
which
I'm
is
happy.
super impressive. Yeah. Obviously very impressive. But like, what you say that, like, so this is what I feel that VCs are saying, that they're like, yeah, we have a model. This has to make sense. We're looking at the exit multiples. But then there's the herd mentality. Then everybody else invests, and then suddenly it's like, yeah, we don't care about that anymore. And then you just want to do the deals.
Yeah. I mean, at some point, and I think this is like, and I'm not gonna, like, every fund has its benefits and you know what they're good at and what they're less good at. I think there's been a very kind of insane price mentality. I think especially if you would buy SoftBank and by the hedge funds coming into the play, because what we've seen over the past year is basically Coatue, Tiger, and SoftBank driving up valuations. You know, when you're crazy enough, you just need to get a seat at the table and you're willing to pay whatever it takes. Like, you wouldn't see the early stage funds paying to sit at the Hopin table at 7 billion. You wouldn't, because you stay disciplined. So that is kind of the herd mentality when you care less about, you know, the diligence of the company. I mean, Tiger used to say that they would spend 100 minutes for 100 million. So that's not the way.
Yeah.
That's a lot, yeah, or not a lot, depending on what you were thinking of.
But I think we'll now say thanks to Maxine. Also, thanks for Kaveh, and thanks everyone for joining. And let's continue the discussion in the common area. Thank you.